The subject for our conversation today is New Rules for New Horizons. The starting point has to be how to connect the conversation about finance with the conversation about sustainability.
We believe that to address environmental sustainability, and we believe that to really make a difference, you have to engage with the economy and the financial sectors.
By bringing together experts from the different fields, experts on the sustainability agenda, regulators and supervisors, and daily actors of the financial markets, we think that we will create a forum where we will be in a position to discuss the key challenges and understand better the way we can make finance part of the action.
This is probably a very important year for that 2015 because we have these very important milestones. We have this meeting in Addis Ababa in 2 weeks called Financing for Development. Then we have the endorsement of the Sustainable Development Goal in New York in September. Then you have the COP21 meeting in Paris. So this year it's about kind of creating a consensus and the fact that we have to change the system.
The financial markets are terrified that they'll be penalized because the central banks are scared. Europe has lost its appetite for looking at climate change as an opportunity to green the world, and we have to convert the climate finance challenge into a climate finance opportunity.
I think the main challenge is a mental challenge, and I think we just think in terms of silos and think that the financial system is in one box and sustainable development is in another box. We need to think of these two things as interconnected and get away from, let's say, maybe 20th century thinking and thinking finance and sustainable development are separate and have a much more integrated view.
What we need is a public debate, a public impetus that says the stability achievements are good, but now we need to orient the system towards more long-term, more private investment in order to finance a sustainable development.
We certainly have to fight against all the bias that are more or less pushing investors and savers in the direction of, again, short-term versus long-term investment.
Across a wide range of countries, from ones with very underdeveloped financial systems to large financial system-based countries, we discovered that there is a growing focus on how to internalize environmental and increasingly social externalities into the way in which financial market decision-making is made.
There are new technologies, new financing technologies that enable sustainable investment. So third-party ownership models in the United States, prepaid solar in Africa, peer-to-peer models, or even just using big data to do credit checks enables people to invest in some of these cleaner technologies around the world.
If you look at green bonds, it's gone from 3 to 100 billion. That's definitely on the go. If you look at what's happening in Kenya with the accounting for natural capital, that's happening. If you look at what the statements are made on China, 10% of the entire banking system being in sustainable products. All these changes are taking place. But what I'm saying is, how do we accelerate all this?
We have decided to exit our coal investments, and we are going to sell the last 500 million we had before the end of 2015, and we are going to triple the green investments we will be making between now and 2020. So it's an example of a financial institution moving and aligning its interests better with the sustainability agenda, and I'm sure that other financial institutions will follow.